Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, March 21st, 2011. Well, let's get into it today, folks. We have a fair amount to cover. Another rally on Wall Street, basically the third up day in a row since we called a bottom for the short term on the markets last Wednesday. Now, how did we know that that bottom was going to be in play? Why did I think there was going to be a good reversal? Why did I put so many bullish plays on the Pro Trader watch list and put out some signals to buy plays on the hot charts and alerts inside the research center? And I'm going to explain it right now, folks. If you go back to Wednesday right here, take a look at the drop. You had this massive drop all the way to the late afternoon session that had the most volume we had seen since May 2010, basically 10 months ago. Whenever you see that type of volume, folks, and the market is selling so sharply and there's panic in the air, oftentimes that's what's called capitulation. Capitulation, again, is where the selling gets to a crescendo, and again, once the amateurs are scared out of the markets, there's no one else to really sell. Institutions are accumulating at that level and continuing to buy up, and that signals the short-term bottom. And again, always think how the little investor gets beaten out of the market by the institution, and they're the ones that sell at the lows, while the individual investor buys at the top. So individual investors sell at the lows, buy at the tops, usually losing out on both sides of the market. All right, now in any case, the market has rallied back beautifully since then. We are hovering still below the pivot high double top from 2011 so far, but we're really far back to that 130 level. And I called this in the intraday stock chat today. And by the way, the research center where you get the Pro Trader watch list and the hot charts and alerts along with the nightly videos, as well as the intraday stock chat, they're free trials at In The Money Stocks for both of those services. Feel free to go check them out. In any case, see this gap fill right here, folks? You guys know we're mostly technically based, and notice this gap fill right here at 130. This is from the gap down that we saw on the 15th of March from the close the previous day, and look at that big gap down. Today that gap was filled, as you can see the green line, and at that fill, that's your resistance spot. And amazing how that gap fill has really put a cap on this market in the short term. As I zoom in here, you can clearly see you touched it here, pulled back, touched it again, pulled back, didn't quite get there, and are now pulling back a little bit more. And this continues to show how the markets just cannot get through these major levels because there's still that little kind of inkling of weakness and fear out there. And that's going to keep at least, a ton of money on the short side, or at least on the kind of the sidelines of the market right now. And you're not going to see the market really rip up in the short term and get through to the new 52-week highs. Now, it's not to say you're not going to get through 130. 130 is just a stopping point along the way. I do think in the next few days, to possibly by the end of this week, you at least get back to 131 area, maybe even 130, 150, 35 area right here, this pivot top, and you have another major gap fill right here. So again, there is a good possibility, but I'm just saying in the short term, you have to recognize how you're getting up into this first major resistance and the markets is not able to break through. Now again, that's the bottom call. I made money on Hewlett-Packard. We had a good call on Nokia. Take a look at Nokia here. What a great trade on Nokia, folks. The gap down to this level right down here triggered a long play for those in the research center. Look at the move back. It hit target today at the 20 moving average. And again, as a swing trader, which is what we predominantly do here at In The Money Stocks, you're looking for the smaller moves in the market over a matter of days to weeks. So again, think about it like this. Think about all the ups and downs in a market. If you could only capture the 1 to 2% move up in the markets, then the 1% drop, and then the 3% up move, if you could capture all those and add those percentages together, you're literally talking about gains per year in the hundreds percentile range. Literally. All right, and that's what we look to do here, and that's what we do very, very well. If you join the Research Center, you'll get on board with that. Chat room does it as well, but more on an intraday basis. In any case, that's what it's all about, folks. And again, another call we made was Microsoft. Right here, pivot low, gap fill right down here. Take a look at this, guys. Look at the bounce you're getting today on Microsoft. Beautiful to the upside. I gave out Apple Computer as well. Look at this pivot low right here on Apple Computer. Perfect little level right there. Look at the bounce off. And also Google. Google was another one on the Pro Trader watch list, bullish side. Pivot low right here, 200 moving average right there. Beautiful bounce. Google's up $15 today. So again, Google symbol GOOG is skyrocketing to the upside. And again, that's what it's all about. Just finding the levels, letting the levels tell you. It doesn't take a ton of research. All you have to do is extend your knowledge to what the chart is telling you. Let the chart dictate what you do. Do you go long? Do you go short? Do you stay in cash? Those are the different positions you can take, and that's what the charts will tell you to do. And again, easily telling us last Wednesday to go long right here on Google and look at the move up. All right, so again, just telling you guys what we're doing here. That's what it's all about. Keep up the good work. A lot of you who are my members out there have made a ton of money, and I'm very proud to say that you guys have done very well at learning our techniques and our methodology. All right, let's go over a couple other things. Today, one thing you are seeing is technology leading the charge. If we go to the Qs, which is the PowerShares QQQ Trust, take a look here. Symbol QQQQ, 4 Qs there. Little gap fill from the beginning of the year 2011. That was another partial signal that told me this market would most likely bounce. And again, you can clearly see it did. You got a nice pierce of that area right into this area. In addition, the spiders did the same thing. If you take a look at the daily spiders chart, here's where 2010 closed. The gap up to 2011, the first trading day, and the market's just ripped up. You negated that entirely last Wednesday on that flush right there. That's called a key gap fill on the chart. And that right there tells you that the market should be finding major support. Again, the panic, the capitulation volume were all signals as well. Now let's go back to the intraday. What's driving this market up today? Let's talk a little bit about it. First off, what you have is AT&T buying T-Mobile for $39 billion, so a little M&A action in the markets today, and that's also helping. In addition, oil is going up. Now, many of you might say, well, oil's going up. Isn't that a negative for the market? And if we punch up the USO, USO's up about 18 cents. It's off the highs, but you still have oil up a little bit on the day. And the answer is, right now, the market saw 105 to 107 oil a couple weeks ago. So anything below that is okay for the markets. The markets adapt very, very quickly until certain levels. Now, if you went to 110 on oil, that would be a new shock to the markets, and the markets would start to sell. But really, in my opinion, anything underneath 105 for now is okay because, again, even oil is on the back burners. We're still focusing on what's going on with Libya and what's going on with Japan and the massive kind of craziness there and that whole nuclear disaster after the tsunami and earthquake. But even now, we still have to shift away, and we've shifted away from what's going on in Europe, which is major. I mean, there's literally cliff dives of defaults in Europe that have to be dealt with here, folks, over the next month or two, which in my opinion are going to keep the markets volatile. Now, as you guys know, I'm neither bull nor bear. I'm just a trader here on a swing trading basis. I pick up stocks for a couple days to a week or two, and I day trade intraday, and that's the beauty of what we do here. But I think it's also important to recognize that the market in the coming months will be very, very volatile. So again, what you want to watch for is the dollar. I think the dollar is an amazing call here. I made a call last week of a breakdown in the dollar, and that's been perfect. Please note the double bottom taken out here to the downside, and the dollar is now cratering. Short-term support's 21.50 on the UUP, which is the PowerShares DB US Dollar Index ETF. So watch that level very, very closely here. But again, we still have a little more downside to go in the dollar until you hit that first support. And even there, I don't necessarily expect a major bounce. I really don't expect a major bounce at that point of interest. So just stay tuned to the dollar trade as, again, I nailed this call of a breakdown of the dollar, and it sure has broken down, folks. Some really good, solid calls out there. The GLD, which is the Spiders Gold Trust, that's having a good update, but it's now into double top, triple top resistance up here. Remember the last time we got above the blue line here and closed above? The amateurs think that's a breakout. In the Money Stocks members of the Research Center and Intraday Stock Chat know better. That is not a breakout. We nailed that call as it fell back down. Now you're back up here. Now you're looking for confirmation. And again, a confirmation is a methodology point we have created, which helps tell us whether or not the stock is going higher or the ETF or the market is going higher, or whether or not it's going to collapse back down. And we nailed that for a pullback before, and then now we're really watching closely. Do we get above? Do we stay below? And you can see it stalling right out here. All right, some really fascinating stuff going on in the markets. The SLV, Silver iShares Trust here, that's also having a good day, up 86 cents on silver today, or on the ETF for silver. You're going to be watching your double top up here, folks. This is your big level right up here on the SLV, and that's at approximately $35.78. So keep a close eye on that. All right, one of my favorite stocks out there is Converted Organics. It's been kind of in the lower range double bottom. Look at this perfect double bottom here, and look at the pop today, folks. Very good to see that pop as some buyers are coming in, some good volumes coming in. I love this stock, cash flow positive essentially. The company should have good earnings when they come out, and it's, again, trading really at a minor market cap. I think it's somewhere below 20 million on the market cap right now, 18.73 million based on 34 cents right here. Amazing to see such a cheap ag play down in this range. And again, they do, growing of vegetables and fruits inside. They do a lot of that TerraSphere. I think TerraSphere is that portion of the company. They do organic fertilizers, which again, in my opinion, will only start to grow as you see more and more pollutants in grass and in food and such like that. Great area here, folks, in my opinion. Huge play. It's looking like it's turning up here finally off a double bottom, and I could easily see this thing back to the 200 moving average at 47 to 50 cents very, very easily, possibly even with a bigger breakout if they had some good news. So watch that, Converted Organic. organics play. I do like it, and again, we have featured that in the research center. We'll talk about that in a little bit, all right? Other than that, I think that's all for today, folks. Markets, again, are really just trading sideways intraday. Nice little choppy sideways consolidation on a good gap up today. Dow Jones Industrial, NASDAQ, and S&P 500 are all trading up about 1.5 to 2%, and we'll watch to see where this all trades. Take care, folks. Have a great afternoon, and join the research center. Join the chat room.